Hi, welcome to What to Know When Buying a Car, brought to you by the Virginia Credit Union. My name is Tom Katosich. I am a financial educator here at the Virginia Credit Union. I manage all of our youth and college financial education programs. Today, we're going to be discussing how to evaluate your car buying situation. Making a purchase for a car is a very big decision financially and a kind of a big life decision because once you go down that route, you're tied to this asset, this tool, this utility for a number of years, and so it can be a really big and sometimes overwhelming process. So we're going to run through the process on how to purchase a car, how to evaluate what your decisions are, and I'll show you a couple links on the credit union website that can possibly help you out in making your decision. Buying a car is a lifestyle choice. There's utility, there's brand and marketing around it, there's style and status that are associated with owning a car. So you have to kind of figure out what your needs are first. And one of the components that we like to focus on here at the credit union is um, the financial component. So there is a lot of uh, things that you need to consider when you're looking at buying a car. Mainly is how much car can you afford. That's the worst thing, is when you go out to buy a car. It can be a very fun and exciting activity, but you don't want to regret it later and become what's called car poor. It's similar to being house poor. So when you're going into the process, first you want to set a budget for yourself and know how much you can afford. You do need to realize that there's more involved in owning a car than just a car payment, which we're going to talk about that in a second. Um, but basically, you need to do a basic cash flow analysis to figure out how much you can spend. A good rule of thumb is your payment by itself should be no more than 10% of your take-home pay, your net monthly income. So if you make like $3,000 a month, then your car payment should not be more than around $300 a month. And then you can also assume another 5% on top of that for additional expenses. As most of us know, that owning a car is much more than just a car payment. So here's some other additional costs that are typically associated with owning a car. You have insurance, multiple different types of insurances actually, which we're going to talk about in a second. And then of course gas, regular maintenance, oil changes, things like that. Registration, taxes, parking may be required depending on your work. Another thing too is unexpected expenses. So not just maintenance, but if you blow out a tire or if your windshield cracks, things that your insurance may not cover. So these are all things that you kind of have to consider, and there are ways that you can kind of estimate what these payments are going to be like. But again, this should be no more than 5% of your total net income that you should be looking at for these additional costs. So with insurances, primary car insurance covers the vehicle. You have two different types: liability and full coverage. So liability is required by the state. It covers another vehicle if you get in an accident. So like if you are the cause an accident, then and you have a liability insurance, then the other driver gets their car fixed and any medical expenses taken care of. There is a requirement in the state of Virginia to carry a minimum liability insurance. For total coverage, a lot of times full coverage covers your car and their car. So it's much more, it's usually more expensive. It definitely is more expensive than just liability. And if you have a loan, your lender will oftentimes require you to have full total coverage. But remember, your car is your asset, and so you want to make sure that it's taken care of in case you get into an accident. But that just covers the car and potential medical expenses based on an accident. There are other things that you do need to think about or could think about when it comes to insurances, like what's called gap insurance. So gap insurance basically like covers the difference between your loan and the amount of the value of your car should it get totaled. Okay, so here's an example. If you go out and buy a car and the car price is $20,000. You drive the car off the lot. You own the car for a few years. You pay down your loan, but the car depreciates faster than you've paid down your loan. So maybe your remaining balance on your car is, let's say, $17,000 on your loan, but the value of your car based on the Kelly Blue Book value or the True Cars value, whatever your insurance company is using, is $15,000. Well, you're still liable for that extra $2,500 or $2,000, whatever it is. So that's what gap insurance covers. Extended warranty plans and credit life or disability, those also cover different kind of components of car ownership. A warranty covers the components of your car And you can actually, usually a brand new cars come with a warranty, which we'll talk about that in a second. But credit life or disability covers if something happens to you, either you pass away your um, or you become disabled due to various different reasons or circumstances. Your loan is protected, so your loan payments will get made. A lot of times, both of like all of these different types of plans are available from various different sources. Sometimes you can get them from the dealer. We offer most of these here at the credit union as a service because we want to make sure you're getting the best value possible. And you can actually include a lot of these insurances into your loan payment, which makes it much more affordable because you'll just add a little tiny bit of cost onto your loan payment, but you'll get the protection added in case one of these things happen to you. So definitely worth looking into, especially depending on the type of car that you get and the value of those cars. Um, so those are definitely things you want to consider. Now, here's the age-old question: do I buy a new car or a used car? There's people that are very passionate about this, and I'm a passionate used car person. A good friend and coworker of mine at the credit union is a very passionate new car buyer. We get into this all the time about which one's better. So we're going to talk about advantages and disadvantages of both. With new cars, of course, the advantage is you get more selection. You get to pick what you want. You may be even able to customize your order directly from the dealership. There are consumer protection laws like lemon laws. So if something is wrong with your car, you can take it back immediately and get it fully refunded, or changed out for a new model. Obviously, a brand new car should be much more reliable than a used car because you know that it hasn't been messed with and it's straight out of the box, and all that kind of stuff. And a big advantage of a new car is the warranty. Warranties are usually in a format of mileage and or whichever comes first, mileage or time. So like 5 year, 50,000 mile, 10 year, 100,000 mile. That means whichever one of those things you hit first, that's when your warranty will expire. That's where you can also look at those extended warranty plans. And warranties typically cover mechanical issues in the car, not if you get into an accident. That's what your insurance is for. Disadvantages of used car, and this is one thing that I just can't pull myself to do, is that initial depreciation. It is incredibly expensive to buy a new car. And the minute that you buy a brand new car off the lot, it immediately becomes a used car. So initial depreciation, which means the value of your car at resale market, your initial depreciation typically drops around 11 to 15% from a new to a used car. That's the biggest, obviously, that's the biggest disadvantage of the new car. Everything else seems great, but new cars are just really expensive. So a lot of people who study these, like there are different studies that you can look at that show like when the optimal time to buy is. I found that about a 3 to 4 year old car is typically kind of in that sweet spot for me. But let's look at the advantages and disadvantages of the used car. So obviously the price is going to be the advantage of the used car. That initial depreciation is dropped off, so you're going to get more value out of that purchase. It's going to be more in line with the actual value of the car in the future. Um, Disadvantages, though, obviously, you don't necessarily always know the history. There are ways that you can verify history and things like that. Um, it might be less reliable. Obviously, as you put miles on it, it may become less reliable, and sometimes the warranty is not fully available. And you have to settle often. Like you don't get to select exactly what you want. It's like building a home versus buying a home that's existing. Sometimes you just have to make concessions. So paying for your car is another thing that you need to consider. Obviously, you could pay with cash. That's a great way to do it. But again, you're taking your cash and turning it into a depreciating asset, which sometimes isn't the smartest thing to do. If you have really good credit, usually financing is probably the best option. Um, you can get borrow money from a family member, but that sometimes is not really a great option or not available for most people. So really, your two options when it comes to financing are a loan versus a lease. This is something that we're really well versed on at the credit union. One of our strongest services we provide our members is very good, inexpensive loan rates. So here, if you go onto the Virginia Credit Union website, I'm going to show you here. So this is our home page. For those of you who are members are probably familiar with this. Usually you click on this up here. If you look right here, just very right on the very front of the page, this is a little section here that says car loans. You just click on this get started, and we'll include a link into this presentation. So you can click on a link and it'll get you right directly to this page. And it shows some information about our current rates and things like that. And then if you just click on the apply now button, you're off and running. There's a couple different ways or strategies that you can do your financing. A lot of times it's great to get what's called a pre-approval, so you kind of know what you can afford before you go in. We'll talk about that in a second. The other option is leasing. So leasing is similar to renting a car, where pretty much you negotiate what a price of the car is going to be, and you figure out how long you're going to own that car, and then pretty much what you're doing is you're paying the dealership just the depreciation of the car over that time plus their profits. So by the time the lease ends, you don't own the car. So here with your loan, eventually that car becomes yours, which is great because a lot of times people like myself, I drive a car till the wheels fall off because I'm more of a person who thinks about cars in terms of functionality as opposed to needing something new and the best technology and all this kind of things. You're not limited to the number of miles, and there's multiple different options for payments. And if you're in a situation where you can afford it, you can actually make additional payments on your loan to reduce your overall cost and interest. With leasing, it's very similar to renting, as I mentioned. A lot of times there are restrictions on how many miles you can put on. Contracts usually go to 2 to 3 years, and a lot of times they'll give you the option to buy at the end. But before you return the car, you have to pay for any kind of damages that you may have incurred or things like that. And plus, the mileage caps can, depending on how often you drive your car, can be prohibitive. There are some other advantages to leasing, though, too. Like a lot of times, most of the maintenance is covered in the negotiated lease agreement, things like that. Um, Leasing is typically done with new cars. One thing that we do look at too is credit. So this plays a key role in what your options are going to be. Obviously, the better credit that you have, the more options you're going to have at better rates across the board. Your lease agreement even is contingent upon your credit. Your insurance payments that you make is contingent upon your credit, or that's a component that's looked at. But the number one thing is of course going to be your loan rate. So with credit, it's basically your payment history on a bunch of stuff, and we don't really have time to get into all of the details around credit. But the thing is, before you go into looking at making a car purchase, and if you're thinking about financing, it is a good idea to check your credit report before you even go in and see if there's a way where you can get your credit score. If you have the mobile app with the Virginia Credit Union, we actually provide your credit score for you once a quarter, and a feature under more services. So if you have any questions about that, you can feel free to reach out to us, and we'll be happy to show you how to find that. If your credit is not great, like if you're a young person paying attention to this and you don't have a well established credit history, you could get a cosigner. Be cautious about cosigning with anybody, though, because if you make a mistake or if they make a mistake on that particular loan that you've co-signed on, that could have an equally negative impact on both of you. So just be cautious about co-signing. So the things that you want to make sure that you're considering about making a good decision is: have you done your research? Uh, or have you run the numbers? Do you know if you can afford it, and not just a payment, but the whole cost of ownership? And do you know what the purpose of this car is? Is it a status symbol? Is it a hobby? Is it just for the utility of getting you from A to B? Does it have the features that you want? Because the worst thing you want to do, especially when making any large purchases, is having a feeling of regret. So do your homework up front. It's a very exciting thing to do. You feel great. You get that new car smell even on most used cars, and it's awesome. But you don't want to be 1 to 2 years in on owning a car and then all of a sudden be like, man, I hate this car and I just want to turn it in, because it's not that easy, especially if you have a loan on it. So here are a couple good resources, and I'm going to flip back over to our website here real quick and show you one that I really love. Um, this is the learn section of our website. And again, we'll throw another link here into this presentation about how to get to here. And we have a whole section about your car around financing and around the car buying process. And there's all kinds of stuff depending on how you like to learn around videos and articles and worksheets and calculators and all kinds of stuff. So just wanted to let you know that that we're here to help in this process, and we really appreciate you guys being members. And if you have any questions, don't hesitate to reach out to us at the Virginia Credit Union. You can contact us a number of different ways, and feel free to contact me directly if you'd like. Again, my information was at the beginning of the presentation here. Um, and we're here to help, and we just want to let you know we got you, and we hope you have a great day. Good luck in your car search.